How's it going, Forex traders? Yours truly, Desmond Samuel. I am back with yet another episode of our weekly Forex Forecast. Guys, I know I've been away for a very long time. I have missed you guys so much, and I'm back with a bang. I just had a few things to get off my desk. I had to get ready for you guys this year. I had to sort out trading. I had to sort out students. I had to sort out equipment for YouTube as well because I want to serve you guys better. All right. So now, without wasting any much time, first of all, I'm back with another episode of our weekly Forex Forecast, and I urge you to sit through to the end because now this year promises to be different, guys. Come with a different approach for you guys. All right. So now back to the weekly Forex Forecast. I'm back to the chat. I'm back to YouTube. I'm back here every single week. So now the first pair on the list now is the euro dollar. As you can see, we've had a very decent run on the euro, and it looks as if the market wants to continue the 2021-2022 collapse across the board for the pound sterling and equally the euro dollar. So as things look here now, remember we had this drop here. This was this collapse that happened in 2021 and 2022, and then the market, and obviously after an impulsive drop like this comes a correction, and then the market actually corrected for I think over a year because this guy started in December 2022 and it is ending in November 2024. All right, so 2 solid years. So now what we have here in our hands, rather on our hands here, is the market actually tried to go higher instead. It came on here to give us a double top instead. Now this is a double top. This is a failed high. This is, in fact, this is not even a failed. This is actually an equal high. So whenever you have an equal high, it's always a double top. All right. So in this case here, this double top is a continuation of this bearish run. All right, a reversal of this midterm pullback here, then the continuation of the actual trend. So now the market has actually broken back down below this blue bar. Now this blue bar was previously a very solid demand level. Now remember that this blue bar reverses price. It does not if a market breaks for some reason, breaks below sustainably above or below this blue bar, it's collapsing. All right, now in this case here for the euro dollar, the market has actually gone ahead to break below the 1.05000 region, and it's actually started to point south. This is south. All right, so now at the bridge of this blue bar exposes a 0.96871. So what does that imply? It means that once this train leaves this station here, is collapsing all the way to 0.96871. That's exactly what I mean. All right, so now scaling down to the daily time frame would actually allow us, think of ways to capitalize on this guy. But the most profitable way, and in my experience, would be to allow this guy pull back into this blue bar, because now this is a demand level turn supply. In this case here, the market had actually, this is, now mind you, this is the weekly time frame. All right, that's something that most of you guys do not understand, is that this is 1 week trading candle. It takes 5 days for these guys to form. 1, 2, 3, 4, 5 at this region here. That's over a month. Then this collapse is happening. So obviously it would make sense for us to wait for the market to actually come back and revalidate. I mean, this blue bar, I get the fact that this blue bar is solid, but just for technical reasons, the market has to come back into the blue bar and then retest, give us a decent bounce. Then we can scale even lower to the 4-hour time frame and look for a decent entry confirmation somewhere around here, something that looks just like this. All right, you can see the way this guy flagged and then flagged and collapsed nicely, and after the market actually flagged and then broke out of this counter trend and it just started melting. That's exactly what we need to see. We need to see market pull back into this blue bar, give us that decent flag pattern like so, and then begin to melt, roll over. All right, so that's just that for the euro. We have in our hands, I think, roughly 800 pips, if I'm not mistaken. We have from the blue bar to this green horizontal array, that is about 822 pips to go. All right, so we have this guy pulling back into this blue bar, then giving us that decent entry confirmation before actually going to short this guy. Prime target for euro dollar would be 0.96871. Beg your pardon, 0.96871. All right, that rim right there. So the next pair on the list now is the pound sterling. Now the pound sterling has an even better structure. I think it just has a different structure, if you ask me. So going from the weekly time frame here, we had this guy break out of this upward trend line here because we actually thought this guy was going to go higher. Instead, he came in here to give us a fake out, and you guys know that after an impulsive move comes an exponential move in the opposite direction. And now this guy was a fake out here, failed breakout, and in this case, market just started melting all the way back down. And not only did it melt all the way back down, it actually came on here and then gave us a clue as to where the market will most likely reverse from if and only if the market pulls back into the this bar. All right, so now that's why I actually highlighted that level with this yellow bar right here, because I mean I've seen that we've actually cleared out this trend line is out of the way, and now the market has to come back into 1.28000 region around here just to give us that decent entry criteria, decent entry confirmation rather, and then have us knock this guy back down. I think we have about 600 pips on this guy. So scaling down, not because this looks like this is like a head and shoulders pattern. This is a head, left shoulder, right shoulder. I mean, technically speaking, I would not expect this guy to come in here and reverse from this point. Okay, I would not expect this guy to come in here reverse from this point or even this point. I would actually prefer to see this guy pull back even deeper to knock to 1.28000 1.28000 region around here, and then give me that decent entry confirmation before I actually go ahead to hop on the trade. So we have three things here in our favor. We have this upward trend line broken, we have this Fibonacci play intact like so, because market has to come back into the supply level, and then we have this supply level holding intact. So this is exactly where I want to wait for the market to come in. Man, we have about 600 pips to play on this guy, if I'm not mistaken. Yep, so we have about 625 pips to play with this guy. So you can imagine starting 2025 with a bang because you subscribe to my channel, which is the reason as to why I'll take a pause on this video and actually ask you, I urge you guys to go ahead to click that subscribe button and turn on the bell icon as well. So as things stand here, I mean, we do have mid-range supply levels, but not really a big fan of this guy. I mean, this guy has already been used. This we had the reaction, then confirmation, then collapse. All right. If you didn't take this trade, just wait for the market to pull deeper into 1.2, because now you need to learn to counter wave. This is wave one, wave two. All right. The third wave is always deeper, which is, I mean, something I would teach you guys in the course. So this wave one, this is wave two. So the third wave will come in deeper and will come in bigger, and that is always what breaks the camel's back. All right, that is the last straw. So in this case here, we need to see this guy pull back into 1.28000 region and then give us a decent entry confirmation before I actually go to short this guy. I'm not very confident about this supply level somewhere. It looks like a trap. All right, so guys, if you've been trading this market for years, like I have, you would actually see through the BS. All right, so now we have gold on our hands here. Gold, we've been calling out gold to $3,000 per ounce. I am still very confident of the fact that gold would definitely rally into $3,000 per ounce. When, I do not know. However, I know we will. But then the first obstacle to clear out of the way is 2,780 dollars per ounce for gold, because this is actually where the market reversed from, and since then we've been in some form of a sideways movement. And now let me see something. Let me see if there's anything worth highlighting. Okay, so now gold could, so we have two instances here. In the event that gold actually fails to continue higher from this point highlighted here, then we could see gold collapse even to 2,300 dollars an ounce, which I do not really think that's gonna happen. But in any case, if that happens, I'll be back here to let you guys know what going. We always have to have contingency plans, all right? So you must plan for your plan not to go according to plan. That's particularly what contingency plan means. So now we have this decent flag pattern here, and the market just broke out and it's starting to point to the north side. I see no reason as to why the market would not come back here to test this 2,650 region somewhere around like so, give us a very decent confirmation before actually going for this trade. So it is exactly how it looks on the 4-hour time frame. 4-hour time frame looks like so. We need to see market drop deeper into 2,670 somewhere around here, give us that decent bounce before I actually go ahead to blow this guy through the roof all the way through to 2,780 first. So once we reach 2,780, guys, we have a free way all the way to $3,000 per ounce. Now the reason as to why I highlighted this green bar is because that's exactly where we're going to be taking out at least 60% of the money, because you really want some money in your pocket in this 2025, guys. I kid you not. I'm in the mood for money. I don't know about you, but I'm in the mood for money. And if you're in the mood for money, I urge you to go ahead to subscribe to my channel and turn on the bell icon so that when I'm back on this screen here, you'll be among the very first few to see what this money is up to. All right, so now the next pair now on our list is the US30. US30 is en route, actually headed towards our target, which was 47,000 basis points, and we have actually gone on to actually bolt out of the demand level, because this was the first touch, third touch, the second third touch, sorry, first touch, second touch, third touch, somewhere around here, and then this was the very solid demand level that I was actually speaking to you guys about earlier, and I said that, yo, this place is quite strong because the market bolted out of here in recent times. What do you think the market would do in the future? We'll always come back there and then react. The market is always reacting, right? It's always reacting. So I see no reason as to why you would try to predict. So now we have three conferences, actually four conferences on our side. We have the third touch of the trend line, which is what always does the trick. We have this demand level holding nicely like so. We have Fibonacci, and then we had the counter trend line break. All right, so scaling down to the daily time frame, we see how this guy looks. So this was a counter trend line break that happened around here. So from swing high breakout, this is where it happened, and then the market is actually pointing north. In the event that you were, so entries were actually very tight on the 4-hour time frame. So in the event that you actually miss this trade, what I would advise you do is, what can you do? Nothing. At this point, nothing. All right, unless of course the market decides to pull in maybe to this demand level somewhere around here. And in any case, that's why I like I said, I always urge you guys to subscribe to my channel and then be active, because, and then also do not watch the weekly forex forecast once and think you have it. Nope. Repetition is where the mastery lies. You have to come back and watch it over and over again, because there are some things that you might think that you have an idea, and also to actually get acquainted with the way I trade, you have to come and watch these videos again, because I will not repeat an episode again. I mean, this is the weekly forex forecast, for God's sake. All right, and there are lots of things that you will not necessarily get in my DM. If you can actually find a discipline to come back and rewatch these things, you will actually get them. It's pretty much easy, straightforward. So in any case, should this guy pull in deeper to 42,400 basis point, that would be that will give us another chance at entry. But as far as I'm concerned, this guy's en route to $45,000, 45,000 basis points, and then subsequently 47,000 basis points, which has always been our prime target right from the year 2024. If you guys doubt me, you can always go back and re-watch my old weekly forex forecast. So now the next pair on my list now is AUDUSD. Now I got a DM from someone stating stating that he was actually confused about the direction of AUDUSD. I mean, this guy is headed, I mean, this is down. This is down, yeah. But what actually sent this guy all the way back down was this third touch of the trend, and then this supply level somewhere around here. Because now, and this is why I always urge you guys to do your analysis from top down. Do not do your analysis here and then now start looking at the higher time frame to see. No. You start from the top and work your way down. So in this case here on the weekly time frame, we are actually able to spot out that we had like a trend line descending, and first touch, second touch, third touch. Again, first touch, second touch, third touch always collapses the market, whether you like it or not. Anything third pullback, third touch, third bounce, it always does the trick. So now in this case here, the market had actually rallied into supply levels around that. So, and then obviously, technically speaking, the market will always react at supply level, and that was what happened. So the market saw all these rigmarole of 2023, they were stuck in a range from here to here, just lacking direction. The market was actually trying to maneuver its way towards this trend line to bounce out of there. You can see it went in there, gave us a weekly engulfing candlestick pattern. Now this is a decent confirmation entry. Then supply level also had its own play. So the market just melted all the way back down from this point, and you can see bearish week, 1 week, 2 week, 3 week, 4 week, 5 week, 6, 7, 8, one struggling bullish week, and then the rest just collapsed. So this was a heavy flow for the AUDUSD down south. So now what we need to see is very simple. Allow the market pull back into this highlighted supply level somewhere around here like so, because whenever the market is going to pull back, it will leave clue before continuing. So in this case, this, as you can see, the market came on here and they gave us a double top pattern and then continued lower. So what we need to see is market needs to go. Now I am in no way advocating buys. You guys can be funny. You can see me call out pullbacks and you think that's the trade I'm taking. Nope. I have to see, because at the end of the day, the market could even continue lower. Do you understand? So I'm in no way advocating buys, and I'm not in any buy trade. I'm not in any buy trade on AUDUSD. All I'm waiting for is the market needs to pull back into 0.65500 region, which is this yellow bar, and give me a decent entry confirmation. That is when I'll be back on YouTube to let you guys know wagwan. Do you understand? So I am in no way advocating for buys. So if you go ahead to buy, and even the type that likes to counter trend trade, I don't know what to say, but I'm in no way advocating for buys, guys. I'm waiting for the sell setup to align nicely before I actually go out to short this guy. That's that for AUDUSD. So I think we have a very decent play also on crude oil. Crude oil is starting to point towards the $84 a barrel region, because on the weekly time frame, I've actually cleared every single obstacle on the way. This is how it looks on the weekly time frame. Yeah, touch one, touch two, and we actually starting to point to the upside. All right. So now, like I said earlier, I'm back on the chat. I'm back on YouTube. So always let you guys know what going. So I've been noticing some form of strengthening on crude oil in recent times, and I've been studying it quite closely, and I can see that this guy is actually in the mood to blow through all the way to $84 a barrel. But before that happens, we need to see the guy. Obviously, you guys know me by now. I trade purely supply and demand, man. I did not really dabble into all that other strategies. I trade what works for me. So now on 4 hour time frame, this is exactly what it looks like. We need to see the market deep into some $73 a barrel, and you can see the market is actually forming something like a reversal pattern, which is ahead. Show that once again I am a no advocating sales. I'm just waiting. This is why I'm waiting to buy this guy. This is the trade I'll be taking, not this one. I'll be taking this one, $73 a barrel all the way to $84 a barrel. And I think oil will definitely go higher, but for safety reasons, I'll be targeting $84 a barrel, because at the end of the day, you guys know how this Middle East crisis can be. Someone could wake up tomorrow and decide that it's a good day to bomb something and then kill people. The next thing you have oil prices, blowing through the roof or even collapsing. All right. So now what we need to see is very simple. We need to see this guy, pull back into $73 a barrel, give us a decent entry confirmation like so. A bounce method will be ideal. Because one thing about crude oil, it doesn't really always pull back like the rest of your currency pairs. This guy falls out of the sky and whoosh, goes higher. All right. So what we need to see is very simple. Allow the market, fulfill every single let it whine and dance and fall on a lap here, which is at $73 a barrel. Once this setup is confirmed, I'll be back on YouTube, guys. I go nowhere. I'm back on the chat. I'm back on my trading desk. I'm back to trading. I'm back to YouTube. You guys have me full time. All right. So $84 a barrel crude oil, but first we have to see the market drop into $73 a barrel and then give us a decent entry confirmation before I actually go ahead to buy this guy. As for the yen pairs, I'm doing nothing on them yet. I'm not doing anything on the yen pairs at the moment. Watching them closely. I refuse to actually dabble into. I refuse to take the bait and start shorting. All right, so let me just see what the market is trying to do before I actually decide on anything. All right, so USD card also has a very lovely opportunity. First of all, we are en route to 1.46741. rather. However, the market has actually left clue here for us to actually wait. So I think I was going to talk about USD card. So now the USD card is correlates with crude oil. So in most cases, they tend to move in the same direction, same stuff. All right. So but we need to see market deep into 1.3900 region and then give us that decent entry confirmation before actually continue higher. All right. So whenever you're trading the USD card or whenever you're trading crude oil, always check what the USD card is doing. That would actually give you like a guide on how to actually go about planning your trades nicely. So for USD card, it pull back into 1.40 thousand, and then we actually see a decent entry. Then blow this guy through the roof all the way to 1.46751. So now the next pair that also looks enticing enough, that looks decent enough, is the USD CHF. Also has a similar setup to oil, and then the USD card. Very simple. We pull back into 0.88. Now let me just show you guys what this looks like on the weekly time frame. So this is more or less a range play. All right, so let's just call this play what is played. Let's call it what it is. This is a range play. So the market has actually come into supply levels here, and you would expect that the market will weaken at supply level, which is typically what's going to happen. And then also we are actually broken out of this downward trend line here, which was the first touch, second touch breakout. This was the bullish engulfing pattern, and then it makes absolute sense for us to actually wait for a pullback at the 0.8800 region. We need to see the market pull back into the 0.8800 region before actually continue, buying this guy to the upside. This is how it looks on the 4 hour time frame. So like I said, always feel free to come back and rewatch this video so you get acquainted with the way I trade and you also learn a few things here and there. All right, so this was the first pullback here. We need to see this guy coming for that second one before actually continue higher. We are actually quite close to 0.92270. In the event, I mean, obviously we have some midpoints demand levels to play with. But guys, technically speaking, from my experience, the market always tends to fall in deeper. Now with the presidential inauguration coming up, I do not really know how the markets are going to react, because we've seen tremendous move in the market post Donald Trump's re-election, and the market has just been very active. I wouldn't say haywire, but the market has been quite active. So I do not know what to expect for the inauguration service. But what I would advise you to do is play safe. Keep your trades decent. Over risk. If you have trades running on that on Monday, have it locked in break even. And then also, like I said earlier, always come out to rewatch these guys. Now, before I call out the last play, make sure you click on that subscribe button and turn on the bell icon. Leave a like and comment. The dollar index has been showing some signs of strength, especially after President Trump's re-election. This guy has been pointing to the upside quite aggressively. So now, from the weekly time frame here, remember we had like that 2021, 2022, rally, very linear, impulsive move. Then the market came in for that pullback, and it's starting to point to the upside now. All right. Now this Fibonacci move is actually four ways. All right. So we have the Fibonacci play on the weekly time frame, which is typically A to B, then C to D. So and then so what this means that it starts at A, continues to B, and then pulls back, takes a pause at C, then finishes at D, and in most cases extends towards E. So this is A, B, C, D, A, B, C, D, and then E. All right. So this is the negative extension 0.27 region, somewhere around there. Like so. So since you know that the Fibonacci play is typically four moves, you actually know that okay, fine. In any case, the dollar index is actually poised to actually rally towards 114.710 region. All right. So that's also how you can use Fibonacci, not just for entry and exit. I mean, I'm giving you guys free stuff, free game, free paid game actually. So the area I'm actually looking closely for the dollar index is 105.61 region. We need to see that deep. This deep is what is gonna deep USDJPY and then USD CAD, including even crude oil. All right. So, but in any case, my long-term target for the XY remains 120, around 121. Now we obviously have to take out something at the recent high, which is around 114 thereabouts. Let me see if I'm not mistaken, 114. Yeah. So we need to take out something around 114, and then subsequently allow the rest roll all the way to 121. All right. So all right, and that brings us to the end of this episode of our weekly Forex forecast. I mean Desmond Samuel. Be sure to let me know what you think in the comment section. Turn on the bell icon as you subscribe to my channel, and I'll see you guys. Actually, feel free to join the Telegram community. Follow me on Instagram, and then also on Twitter. I'll be a lot more active on social media this year. And then also feel free to email me if you have anything to discuss. If you have a challenge with trading, my email is always down below there. Then turn on your bell icon. Do not forget, and then also be sure to sign up using my recommended broker in the comment section, which is XNES. All right. So I'll see you guys in the next episode. Peace out and trade safe.